Hello and welcome to this episode of Transparent ULIPs, a customer education initiative launched jointly by Bajaj Allianz Life Insurance and the Money Mile. With me today is Sampath Reddy, the Chief Investment Officer at Bajaj Allianz Life Insurance. Thanks very much, Sampath. Always a pleasure talking to you.
Thank you, Vivek.
We've had a very volatile bout in the markets, and one of the things that you've said before also on this channel is that ULIPs work very well in volatile times because you're able to move from one asset class to the other fairly seamlessly. Right. This was a test case, isn't it? I mean, 10% off the highs. What was the reaction that you saw from your investors? What were you as a fund manager able to do for them?
Right. Yes, in fact, ULIPs have this flexibility of moving from equity to the debt, or within the equities also from large cap to the mid cap funds, because when one is moving from one fund to other fund, it is not construed as actually the sale and buyback. So it's within the fund. Once what you paid to the ULIP is what is the sale, and when you actually redeem after your policy term is over, that is when actually your sale. So in that perspective, technically customer can shift between the debt and equity, or within the equity multiple styles any number of times. In this volatile, if one were to use this as an opportunity to move away from equity to the debt, and now if one thinks that markets have bottomed out, one could move back into the equity. That flexibility is always there. I mean, having said that, not really many customers have been using it, I believe. It is just simply because of lack of awareness, and a lot of times when the customers realize that markets have already fallen, that fear of shifting into the debt at the bottom, that could at times prevail them. But some of the smart investors, when they've invested with us for a long, early on, maybe 2-3 years back, they've moved on, they've booked some of the gains by moving into the debt funds, early into this fall. So that is, I think that's an advantage. Yeah, I mean, it will be beautiful if more and more customers use it as an asset allocation. It will work fantastically.
And do you also have a default option for investors that, supposing I don't want to make the decision to move from debt to equity or equity to debt, you will, as the fund managers, do it for them?
No, that default option we don't do that, because when we give the customer entire investment styles, a large cap equity, mid cap equity, balanced fund, ethical funds and passive fund, debt fund and liquid fund, entire 7-8 product funds we give. We cannot shift between the funds on behalf of the customer unless customer, it has to be only on the customer instruction we have to do it. But for the customers who are unable to decide between the allocation, we have been suggesting the asset allocation fund, which is basically the balanced fund. Here we as a fund manager will be able to move in to change the asset classes, based on our view of the market. But the customer can choose this particular fund.
Since we're talking about, transparency, one of the things that has happened post the 4G ULIPs is that there is a far more easier way to switch. There used to be earlier limits, and after a certain amount, you could not switch without paying a cost.
Right.
As I understand, the switches are now unlimited and free of cost. Is that right?
Right. Yeah, the switches are unlimited and free of cost. And as a part of this 4G ULIPs, we call it 4G simply because not just this additional feature of switching in, switching out more number of times, but also the costs are a lot more. Come down. The costs are a lot more completely transparent in most of the cases. There are nothing like an allocation charges.
So there is a lot of disclosure that happens to a unit holder. What, according to you, Sampath, are the 2 or 3 things that I should look for? You mentioned, the fund management charge, which is listed there.
Right.
What are the other charges or categories or buckets that is disclosed, and what should I as a consumer be looking out for?
Right. I think fund management charges is one of the important charges, where in fact even a regulator have capped for the fund management charges for the ULIPs at 1.35%. That's that's a regulatory cap. And apart from that, ULIPs generally have been charging some sort of policy administrative charges and the allocation charges. These are the 2 other charges one should look at it. Earlier, these 2 charges were quite high. I mean, today in this in the last couple of years, or in the last 1 year onwards, I would say, most ULIPs have drastically reduced their overall expense ratio that they charge to the customers.
Thank you very much, Sampath, for
Thank you,
talking to
Vivek.
us.
Thank you.